Hello, everyone. This is Ryan Mallory for SharePlanner.com. Today is July 18th, 2014. Doing another hangout with you guys, and we've had a pretty interesting week, especially when you consider the actions that we got out of the market yesterday, where I guess you had Russia or it's Ukrainian rebels blow a civilian airliner out of the sky and basically create a whole bunch of turmoil for the markets as a result. Because what happens is you get like a country like Russia that is a world superpower per se, and they do something like that where it does involve American citizens on board, and you saw some of the turmoil that Russia created just by going into Crimea. Well, when Russia blows a civilian airliner, assuming that was who was behind it, that's going to create a lot of tension. Some people will start beating the war drums and everything else, and people will start getting themselves on a slippery slope, and as a result, you get these days where the VIX, and honestly, I can't remember the last time I saw VIX rise 40% in a day. I mean, I know I've seen it before, but it's been a long time since we've seen something like that. And you can see that now that the world has had a chance to sleep on the events of yesterday, the price action has come way back down. I mean, we're off 16.5% on the VIX. So, I mean, when you get one of those days, if you're long on the VIX, I mean, you've got to take those profits. I mean, you're just not going to get that kind of a move all the time. And when I say long on the VIX, I'm not talking about VIX. I'm talking about all the vehicles that are out there to trade VIX. And then, of course, you had the Israelis doing a ground offensive into the Gaza Strip. I don't really see that as a big deal for the markets. I mean, we've been dealing with those kinds of things off and on. There was like a period around like 2006, 2007, I think it was, where it was like every day I was, I would, turn on the futures to see what they were doing. Israel was, or the Palestinians were stirring the pot with each other, and it was creating a lot of market turmoil, and as a result, it would affect futures. But after a while, we got past that and just sort of accepted that as the norm, or that's the way it's going to be going forward. It really doesn't affect, the market per se. So I don't think that has a lot to do with it. I think it might have been the combination of just a lot of things going on yesterday, that something like crime, or the Israelis and the Palestinians going at each other created more additional tension in the markets. But if it was just Israel and the Palestinians on their own yesterday with no other events, I think the impact would have been very little to none. So really, it was like a sum of the parts yesterday, and mainly just the civilian airliner being shot down out of the sky. So. But like I said, the market had a night to sleep on it, digest it, and you can see that today on the S&P, it's really not as concerned by what we saw yesterday. We're getting a fairly decent bounce back. Do I expect us to wipe out all the losses in one day? Certainly not. It's not impossible, but I don't expect it to do that. Especially on a Friday where a lot of people are a little bit nervous ahead of the weekend. I, for one, would probably add more positions on a day like today. I've only added one, and it was in BKD, and we're basically right where I got in at 35.28 right now. But and that's a stock we actually got out last week or earlier this week for a small gain. We're back into it this time around, and going to hold it into next week, looking to see if it'll expand out of this inverse head and shoulders pattern here. You got the left shoulder of the head, and then you got the right shoulder. It's breaking above the resistance, so it's a really good setup. I think it reports earnings on the 6th of August, so we got a little bit of time before we have to close out of that stock. And I'm not afraid to go back into stocks after I've either been stopped out or taken profits earlier in the week or the week before or even the day before. And I don't really target to do that, but what happens is that sometimes after I get out of a stock, and I think we got out of BKD for like 1% or 1.5%, and I don't necessarily keep flipping back to that chart to see what it's doing. What it does is that when I run my scans at night and I'm going through the charts each day, if BKD is popping back up again, then I don't even look when I'm looking at charts. I don't even look at what symbol I'm looking at. I'm just looking at the charts, and then if I like it, then of course I look at what the symbol is and I write down the symbol. But BKD popped up this morning for me, and I said, geez, that's a good symbol. Now then, when I saw that it was BKD, I said to myself, oh, do I really want to get into it? I just closed it out, and now it's popped a little bit since I've got out. Do I really want to do that? But at the end of the day, a setup is a setup. It doesn't matter if it's the same 3 letters that you traded a week or a day before. If the setup's there, you got to take it. So that's what I did with BKD. So back to S&P 500. The reason why I'm not really adding more short positions is because we are still relatively young into the news of yesterday. We're on a Friday, so we got 2 more days for things to happen. So if I'm wrong about the impact that the Ukrainian airspace and the civilian airliner being shot down has on the markets, if I'm wrong on that and something plays out, tensions start rising, somebody fires a missile at somebody else, and all of a sudden the futures are impacted, I don't want to be more long than what I am currently right now. Right now I can manage it. In fact, I have 1 short position in the portfolio, so that gives me a little bit of a hedge. But I really want to see how we go into Monday and everything. Now, if today was like a Wednesday, I'd probably add another position. But with the weekend ahead and the opportunity for 2 additional days for something to hit the fan, I'm not going to go add more positions at this point. So yeah, I'm still concerned about risk, but I do think that we've probably seen the worst headlines come out of this thing. I think for bear markets to really sink their teeth into the price action and for us to see something like what we saw in September of 2011 and 2008, or even just a 10% pullback per se. In order for us to see something like that, you need a pipeline of bad news. I just don't know if the airliner, it'll be in the news for a few days and people will be talking about it in the black box and all that stuff. But is it going to be a pipeline of new and fresh news? I don't necessarily think that it will be. I mean, you look at like 2011, right, the summer where we were pulling back like 20% or so. The reason why was because there was just a consistent pipeline of banks failing in Europe and crises, new crises every day playing out as well. So that is really what you're looking for. I don't think a one-time event like the airliner, and I think Israel and its conflict with the Palestinians is so saturated into the markets. I don't think that even if it goes on and there's something new happening every day with it, I don't think it really impacts the market that much. So I think this was more of a one-day selling event for the bears to make a quick buck to the short side and for people to be able to get back into stocks on the cheap. So we're overextended, guys. We are pretty much in a bubble in this market. The problem is you can't short a bubble. You just don't, because you don't know how high it's going to go. You don't know how far the bulls are willing to take it. So what you do is you follow the trend. Once that trend line's broken, then you start getting to the short side. Now I added a short yesterday in CMI, and it's up today, and I would pretty much expect it to be, but it's not up by much. It's up 0.5%. The market's up 0.75%. So this thing is not even on par with the market. But you can see here, if it breaks through the support at 151-ish, it's going to drop quite a bit. But it also gives me the flexibility so that if this market does turn lower, as I get out of one long position, I can add a new short position, and I'm quickly building up my short exposure. But the market's not ready to break down. This is more a precautionary type of thing here. There's a good chance I'll probably end up closing out of it at some point next week. So the S&P 500, it's the biggest thing from a technical standpoint is this trend line right here that started off of the April lows, specifically April 14th, and it has been tested again in May, and we haven't tested it since. We got fairly extended off of that rising trend line, but we pretty much tested it yesterday, I'd say. I think that is a very safe bet. I mean, we didn't get right quite on it, but within a couple points. And you can see today we're bouncing higher. That's a very good sign for the market. We're already back above the 10 and the 20-day moving average, so that's also another positive development. And I think that as we go into next week, there'll be a lot more opportunities to add new long positions. The tough part right now with this market is the daggum earnings season. I would probably say 80% of the good trade setups that I'm finding out there are trades that I can't take because earnings are next week. So once we get past like the 24th, I cannot wait for that date to pass, because I swear I think all those trades that I've really wanted to take this week have had earnings on the 22nd, the 23rd, or the 24th. And if you've been following my trades for any length of time, you know that I don't hold a stock through earnings. I just think it's foolish, from an equity standpoint, because you can't predict the ultimate outcome of that stock with any real precision or edge. And so I'm not going to risk it where I have a good trade set up that might be going in my favor by a couple percent, and then I wake up the next morning and it's down 20% because their profits didn't align with what some analyst up in New York thought it should be. So I don't play the earnings. I've played them in my youth, and I don't like them. So there's a lot of good trade setups there that I've had to get rid of. I mean, I can name a bunch of them, but in any case, once we get past that, I think the trade opportunities will really open up. And let's see here. So I got distracted there with a phone call there, but thank you for the wife for calling me right in the middle of the day there. It happens, right? Let's pull up the Russell chart and see what that one has to offer us. There's a lot of talk about this losing the 200-day moving average, and also about, actually I'm going to pull up the IWM chart. 114, a lot of people were talking about it losing 114 because there was some support there, and right now it still hasn't reclaimed it. That is a bit of a concern, but if you look at this thing going all the way back into, I think you can go all the way back into December with this. It has been in a consolidation range. Small caps consolidating. I don't see it breaking 114 as being a huge issue per se. I mean, you can basically draw the range out going back a long ways. It's not done anything, and I don't expect it really to either. Once it gets back, it needs to close back above 120. If you look at it from like the weekly chart, you can see the consolidation really well. I mean, it just hasn't gone anywhere. So if it breaks 114, that's not a big deal. What would concern me most about the Russell is if it broke below 107.50 or so. If it does that and it closes below it, that's much more concerning. And also too, on the weekly here, the 50-week moving average, there's actually some support there. I mean, we tested it yesterday, held, and we tested it way back in April and May and held there as well. So it's not as bad as it looks. I think it only gets bad if it confirms this possible double top that is forming. So until then, it's just consolidating. So I wouldn't look too much into that. And then let's go ahead and look at some other trade setups too. A couple of users asked me to look at a few of these stocks. One of them was YUM as a bounce play. You do have some support there at 77. Whether that can hold or not, I don't know. I would say it's probably one of the better bounce plays. And when I say bounce plays, it's more like falling knife plays. I'm not a big fan of trying to catch the falling knife. If I do, it's going to be because it's testing a key support level. And if it's testing a key support level, okay, then maybe there's an opportunity to get long there. And you do have that with YUM. You can get long at $77 or as close as possible to $77 because that's where the key support is. And then you could probably put a stop loss below, say, I would say if it goes below 75.40, then you know, okay, the trade's broken. It's below another support level at that point, the support level here, and you probably don't want to be long on it anymore. So YUM, it is a pretty decent falling knife scenario. Once again, I'm not a huge fan of them, but when you do them, you need to make sure that it's just not bouncing out of thin air, that it's actually bouncing off of a key support level. With YUM, you do have something like that there. DDD, this is actually not a bad setup either. I mean, you got a nice little basing pattern here that is formed going back to April, and then you also have a little bit push higher, about 3% today. If you're going to get long on it, you probably have to do it today, because if it continues to move higher into next week, the opportunity is not going to be there. So I would probably put the stop loss below yesterday's lows at 55.50, and so you're playing with a little bit less than a 4% stop loss. And the opportunity for a move into like the mid 60s is very real there. Very volatile stock. The stock can move 3-4% in a day either direction, and it not even blink an eye. PBR. I like this. I had it on my watch list. You can see down here, PBR. Nice little double bottom there that's formed, and then it broke out this week. It really broke out back on Wednesday, and it soared higher today, probably because of earnings. That's probably why also I didn't play it. It was one of my stocks that I had. Let me check my notes. Yep. And I couldn't play it because of the earnings, but you could see there it was just a beautiful setup that for any other reason besides earnings, it would have been worth getting long on. BX. First thing I noticed right off the bat on BX is the increasing volume. I haven't had a lot of good luck with trading financial stocks this year in 2014. They're probably one of the industries that have given me the biggest fits. So I've stayed away from a little bit lately, but BX is definitely breaking out. Yesterday is actually its breakout day, and it broke out way above the ideal entry level of around $34, and then it came right back down to that price level by the close of the day with the market weakness. And then today, of course, it resumes it. So if you got in yesterday, you're sitting pretty good on that trade. I like it. I think you're chasing it at this point, though, if you want to get long on it. So I would stay away from it at this juncture. And then we already talked about BKD, but I want to talk about a couple other positions in our portfolio. AXL, this stock, golly, we've been holding the stock since the 8th of July, so a little over a week now. And you can see it's got a really nice basing pattern, but it's not really performing well for us. And but while it's not performing well for us, it's not breaking down entirely either. There's definitely an itching of mine to want to get rid of this stock, because the longer I'm in a trade and it doesn't do anything, the less my patience for that trade I have for it. And really with AXL, or with any stock really, the longer you're in a trade that it does nothing, you're just exposing yourself to unnecessary risks. So if it's not doing anything, I'm not just going to stay in it forever and hope that it eventually awards me, because I'm just exposing myself to risks for a possible reward that I might not ever see. So AXL, what's keeping me in it as of today is this trend line here. You can see this rising trend line. It's testing it for the third time, but it's not really moving much with the market. The market's up 15 points today. AXL is doing jack squat, and I wish that wasn't the case, but it's still holding that trend line, albeit barely. It's holding that trend line, but it is holding that trend line. You can see. I mean, this is about as tight of a trend line as you can possibly draw. I mean, it is testing it perfectly. It dipped down below it a little bit early on this morning, but since then it has held. And I'm more concerned about where it closes at, not where it goes intraday. So we saw this with BKD earlier this week. Okay. BKD tested this support level, and it bounced hard, and rewarded the people who sort of stuck out that time in it. So I see BKD honestly very much like I see AXL. BKD, same kind of inverse head and shoulders pattern. AXL, a lot more choppy, but you have a left shoulder here, head, and then you have a right shoulder there. So similar pattern. It just needs to bounce off of that price level. Once it gets back above $20, I mean, this should be a very good trade. It should be really mint. Let's look at one other. So actually, I got a few more that I want to look at. KATE. We're in this one. We're in it from 38.10. It's at 39 right now, and we had to be patient with this one, but now we're finally seeing where this thing is wanting to reward us some. I mean, it's trading now at 2.5% higher on the day. It went right to that trend line. I mean, this is similar to BKD and AXL as well. It's not the same inverse head and shoulders pattern, but you had the coiling, it broke out. It really didn't do much for us at first, but it held that trend line. And then finally today, it just, for whatever reason, it's pushing higher. So that's what I'm looking out for, looking for AXL to do, and what BKD has already done. A couple of trade setups that I think that you can, if you're comfortable with this market and you want to trade them today, I think there's two of them out there. HPQ, Hewlett Packard, really nice basing pattern here. It's broken out. It's got a little bit dirty here back in late June and early July, but it came back out, and it's sitting right there above that breakout level. And with some of that strength today, it looks like it could venture up to 36 and change. So there's an opportunity probably for like 5-6% on this trade, maybe less, but overall it's not a bad trade at all. I think you can get in at the current price and stick a stop loss below the open from July 10th at 33.42. If it gets down to that point, it's time to get out of it, because it's not really it really doesn't like trading below that 50-day moving average that much. So if it does, it's probably a good time to get out of it. And then you also have some price support here as well. So I do like that HPQ trade. I think there's some definite merit to it. And then finally, TTM. And this is a stock I can't remember if I've ever traded it before, quite honestly. I've traded Tesla plenty of times, but TTM, the coiling at the highs, very, very appealing. And then you have this nice little basing pattern right here. You can probably draw it as an ascending triangle pattern, if I'm not mistaken. Yep, look at that. See? This is where I start to sound like that old painter Bob Ross on PBS. I think he's dead now, but the ascending triangle pattern's there, and it looks spectacular. I mean, you could tell it holds that trend line, that base, very nicely. It's broken out, and then it's done what I love to take advantage of. It's pulled back to that breakout level. It held, it bounced, and it's pushed higher. Now, ideally on the bounce, I like to get in closer to like 40.37. That's obviously not the case at this point. But what you do have is about 3 days of coiling right at the highs here. That does still make it a very appealing trade setup. So you can get long on it at like basically at the current price. I maybe wait for it to get back above 42. I'd probably feel better about it above 42, because if you look at the 5-minute chart, it's been giving up some of the gains. So pop it back up to 42, get long on it. Careful a little bit with the shares. It's sort of thinly traded today, but overall it looks like it trades consistently about 1 million shares a day. And then you can put your stop loss at, I would just go right below support here. 40.05, 40.08, somewhere around there. And yeah, I mean that's a good trade setup. So there's a couple of trade setups there. We talked about some of the existing positions that I currently have and how I'm managing them, and then the market as a whole and some user requests. So if you guys have any questions for me, please feel free to email me at ryan@shareplanner.com. I'm a little bit behind on emails this week here. I got swarmed with it, especially after yesterday's sell-off, people asking lots of questions and everything. So I'm trying to get caught up with that, but I promise I'll have everything caught up by this weekend. And if you send me an email, I will be sure to respond to it at some point this weekend. And I'm also, the best way to reach me is honestly signing up for the Share Planner Splash Zone. I'm in there every day. I take questions all day long. I'm not one of these alpha males that try to beat people over the head about the righteousness of my stock picks, because they're not. They're fallible, just like anybody else's. I just tend to cling to risk as my mantra, and to keep it as tight as possible. And it's a great community. There's some great options traders in there, and you've got some great investors in there, and you've got some great momentum traders and swing traders and bottom pickers. There's bottom pickers. Sorry, that's my maturity coming out. In any case, though, there's a plethora of of different types of traders and experience levels, and people ask some of the most basic questions to some of the more advanced questions, and it's a great time for an opportunity for you to grow as a trader, to grow in your skill sets, to grow in your ability to trade profitably consistently every month, and with that you'll get my my weekly or my real-time trade alerts, my swing trades that include the entry price, the entry range that I recommend getting in at, as well as the stop loss to use. And then I also provide explanations in the chat room for each and every one of my trades, charts, you name it. And hope to see you guys there. I hope you guys will give it a try. 7 days at least, and it's free for 7 days. If you don't like it, you can cancel it. There's no questions asked, no guilt trips or anything like that. You have full control over your subscription. So hope to see you there. Y'all have a great weekend, and God bless you all.